Welcome back to Finpod, your daily financial digest. I am Evan, and I am glad you are here to wrap up the day. Before we dive into the action, a quick shout out to our sponsor, Fintwit.ai, your go-to platform for real-time trading signals and stock recommendations. Let us get right into the heat of the market. The conversation today is dominated by the massive pullback in chip names. NVDA is the big story, down 5%. The catalyst? Reports that the company is in talks to provide a massive $250 billion backstop for OpenAI's data center projects. Investors are getting jittery about these circular deal structures, which are drawing some uncomfortable comparisons to the dot-com era. Then there is the Dutch lithography giant ASML, which slid nearly 6%. The market is reacting to reports that a Chinese firm has successfully started limited production of domestic lithography machines. While analysts are calling the sell-off disproportionate, the geopolitical nerves are clearly visible. On the flip side, Apple is holding strong, up over 1%, as it briefly reclaimed the title of the world's most valuable company. Investors are piling into calls ahead of their earnings report later this week, betting on continued services growth. Microsoft is also up nearly 2% as the market positions itself for their upcoming quarterly results. Finally, Corning is down over 2%, likely reflecting some pre-earnings jitters as the market weighs their AI infrastructure exposure against a stretched valuation ahead of their report tomorrow. Looking at the broader market, indexes had a mixed finish today. The Dow rose 0.5%, boosted by a significant retreat in oil prices as tensions in the Middle East showed signs of de-escalation. The S&P 500 finished barely changed, effectively breaking a 4-day losing streak, while the Nasdaq slipped slightly, dragged down by that weakness in the semiconductor sector. It was a classic day of sector rotation, with investors favoring consumer defensives while rotating out of energy and tech. Turning to the AI economy, the industry is at an interesting inflection point. We are seeing a major push toward open source and open weight AI models. Dozens of tech and security firms just launched the Open Secure AI Alliance, arguing that open systems are essential for security and innovation as we face an AI arms race with China. Meanwhile, the massive capital expenditure trend continues, with roughly 2,800 data centers currently planned for construction in the United States alone. In other stocks in focus, we saw some notable moves outside of the major tech names. Software giant ServiceNow surged today, helping software stocks erase some of the losses seen earlier this year. On the earnings front, it has been a busy day. Nucor crushed expectations with a 7% earnings beat, driven by record steel mill shipments and high utilization rates. Celestica also impressed, beating estimates and raising its full-year outlook thanks to explosive demand from data center customers, sending the stock up 4%. Welltower, the healthcare real estate trust, reported a solid quarter, though the stock dipped 1% as investors perhaps took some profits. Cincinnati Financial saw its share slide 5% in extended trading after reporting a hit from higher-than-expected catastrophe losses from severe spring weather. Meanwhile, Brown & Brown climbed 3% after reporting strong revenue growth, and Coca-Cola FEMSA rallied 6% on the back of record volume growth in Brazil and Colombia. Lastly, Telefónica Brazil posted double-digit growth in both revenue and profit, proving that their mobile and fiber expansion strategy is paying off. To recap, it was a day defined by semiconductor jitters, a welcome cooling in energy prices, and a flurry of strong earnings reports that kept the market balanced. Thanks for tuning into Finpod. If you enjoyed today's breakdown, please like, share, and subscribe, and drop a comment below if there is a specific stock or sector you want me to cover tomorrow. For the best stock recommendations, head over to Fintwit.ai. I will see you all back here tomorrow.